Well, the latest inflation data out today underscored the rising rates for rent across this country. And according to a new report by Urban Nation for Rentals.ca, asking rents ended last year at a record high of $2,178. That is a jump of nearly 9% from the previous year. What should we expect this year? Well, let's bring in Shawn Hildebrand, president of Urban Nation. Shawn, thanks so much for joining us.
Thanks for having me.
So before we look ahead to this year, let's look back a little bit and give us a sense of the conditions that you think contributed to this jump of nearly 9% in the average rental rate, kind of across the board there at the end of the year.
Yeah, it was an exceptional year for rent increases in Canada. As you mentioned, the 9% growth last year was considered to be very strong. It followed 12% growth in 2022. So when you look at the last 2-year period, rents have grown by about 22%, or on an average monthly basis by nearly $400 a month. I think what's very interesting about this is that type of rent growth has happened despite the fact that we've seen the highest level of new rental completions in Canada since the 1970s. So this just speaks to how strong rental demand is across the country right now. And this is driven by a number of factors, but I think the three most important are record population growth, over 1.2 million in terms of population increase in Canada last year, a 15-year low for home buying activity. So when the population is growing and there's not as many people buying homes, inevitably you see an increase in rental activity. And as well, throughout the year, we saw a stable economy, still low unemployment, and that was leading to continued growth in household formation. So the combination of all of these factors led to what we believe is an unprecedented level of rental housing demand last year.
Yeah, and when you take a look at just that headline price there, Shawn, we've got another graph that shows how prices have climbed over the past couple of years. Well, they did go down a little bit in the pandemic, didn't they? And that it offered sort of a glimpse of hope for anybody that could get a new lease right then, though there wasn't a ton of movement happening at that time. But it really has been quite the climb since 2021 until this point.
Yeah, if you look back historically, the last 30 years for the rental market in Canada, you'd see that the average rate of rent increase is just below 3%. So the 9% growth that we saw last year is more than 3 times faster than what's considered to be normal. When you look at the 12% growth in 2022, yes, part of that is some of the recovery from COVID, but the growth that we saw in 2023 was growth off of already all-time highs. So this is obviously much faster than income growth, and it's causing a real deterioration in rental housing affordability across the country.
Yeah, across the country, because you've broken it down by regions as well. Did anything jump out to you in terms of prices by city or by area?
Yeah, regionally, I think you can quite clearly correlate rent growth with population flows and rental affordability. So those markets that saw the strongest migration and had relatively cheaper rents saw the strongest growth in rents. So those would be Calgary, Edmonton, recording 14% plus annual growth in rents in 2023, whereas the more expensive big cities such as Toronto and Vancouver saw marginal growth or perhaps even slightly negative growth to end the year. So I think this speaks to some resistance in the market to how expensive rents have become. And there's been some outward migration from these big expensive cities into relatively more affordable markets. We're seeing that within Toronto, we're seeing that certainly within Vancouver, and the beneficiaries of this has largely been within Alberta.
When you are looking ahead to this year, I mean, we're in it now, but as we look further ahead into the year, Shawn, what do you think could happen with rent prices? We have this possibility of interest rate cuts coming at some point, although, we're hearing maybe those expectations getting pushed back a little bit with this hotter than expected inflation data. But what sort of influence does that end up having on the rental market?
Well, the rental market in Canada is structurally undersupplied. We've been underbuilding rental housing for decades. So there's not going to be a whole lot of change, unfortunately. I think the factors that were pushing up rents as strongly as they have over the last couple of years are probably going to moderate to some degree. I think the government obviously is looking closer at capping foreign students. That's going to perhaps slow down population inflows. Some interest rate cuts may cause some home buyers to move off the sidelines. That could perhaps alleviate a little bit of pressure on the rental market. And obviously a slower economy, some higher unemployment will obviously lead to less household formation as well. So there could be some moderation there on the demand side. Supply is probably going to continue to pick up, at least in the short term. We're going to continue to see rental completions move higher across the country in most centers, not in Toronto, but in most centers. So that should take a little bit of steam off the market, but still, I think we're expecting to see rent growth in sort of the 5% range for the country, which is bringing things back in line with the 5-year average. But again, when you consider it against long-term historical averages, we're still expecting the rate of rent increases to be above normal this year.
When you're looking even further out, Sean, I wonder when you consider the GST on rental buildings getting waived, whether you think that could lead to more construction of rental in the future. We spoke with a developer who was talking about how he had heard projects actually being changed, so that were going to be condos. Now they're going to be rental buildings because of this change to waive the GST. I wonder how optimistic you are.
Yeah, I think there's optimism. I think there's reason to believe, due to this policy change and other factors, that we could see an improvement in rental construction over the next couple of years. But also take into consideration that we actually saw a decline in rental construction starts in 2023. So the big jump in interest rates, huge increases in construction costs, development charges, these are all very big factors that are impeding new rental housing development. The GST removal is certainly one thing that will help move things in the right direction. But again, we're dealing with decades of underbuilding of rental housing. And the level of construction that's underway is grossly insufficient for population requirements. So things will probably, improve to some degree in the coming years if we do see some improvement in rental housing construction. But again, the GST is not considered to be, a silver bullet, and I think there's more policy encouragement that's needed in order to bring rental housing construction up to a stronger level than what we're seeing right now.